The market. The market just had one of its sharpest drops of the year following the new U.S. China tariff escalation. What happened? Something happened on Friday, and it caused the market to fall down the highest drop that we have seen since April. And what happened? Well, it's about rare earth mineral, folks. And I want to explain to you what's going on there because, yes, the market is down. Yes, it's a concern, again, about the tariffs. But I think it's an opportunity. It's an opportunity because at the end of the day, for now, at least for now, China and the U.S. have got to get along. Now, how long that's going to last, I don't know. I don't know because obviously there's a serious amount of buildup between the two countries. What, at the end of the day, from a geopolitical point of view, what is it that China is really after? I believe that China really wants to dominate not the entire world, but the region that it's in. It's next to China, is next to India, is next to Russia. So why not all just get along? Why can't we all just get along, as it was once famously said? Right. So what's going on? So essentially, the market at their worst drop off, like I said, following the U.S.-China tariff escalation, with Washington, President Trump, threatening 100% tariffs. I mean, basically, we're closed for business, right? And Beijing responded with rare earth export restriction. So these minerals, they're essential for EV, fighter jets, wind turbines, smartphones, have suddenly become the center of a geopolitical tug-of-war. Well, I wouldn't say suddenly. What I would say is this. We have seen, if you look at my live and my videos, we've been talking quite a bit about rare earth minerals since, I guess the first time we heard about it is when Zelensky came to, remember, he went to Washington and the administration wanted rare earth mineral deals. What are those rare earth minerals? Why is China on top of it? Well, frankly speaking, they are doing something that no one wanted to do. This is a very dirty business. Rare earth mineral is a very difficult undertaking. It's very dirty. It takes years to develop. But China did it, and now they control over 90% of the market, meaning that they know how to mine it. First of all, I just want to say something that's important is when we're saying, rare earth, there's nothing rare about it. We all have it. It's just that it's very difficult to go dig it. And China, they went ahead and did it. Now, for you to catch up, it's going to take you 10 years. So good luck on that. That's going to take a while. But at the end of the day, as an investor, there's still opportunities. And I will explain to you why. So what triggered this new tariff wave, and how is China rare earth strategy fits into it? Why rare earth like neodymium, dysprosium, and terbium, for example, are critical to the U.S. defense and clean energy supply chain? What's going on with these things? The U.S. stocks are also benefiting. Remember, the stocks like MP Materials, Idaho Strategic Resources, which I recommended to my subscribers, and of course, first I recommend it to my members. The stock is up a lot, and we'll talk about that as well. How is the market reacting? Which sectors are under pressure, and whether this could signal a new phase of U.S.-China trade war. So let's see what happened. Let's understand what is going on, because I want you to understand what's happening, because it's important. It's important because if there's a war between China and U.S., you want to find out about it. If the stock market is going to crash again, you want to know about it, and you want to know what to do. Okay. So essentially, it's very simple. You've probably seen the news. 100% tariffs threats from the U.S. The U.S. announced it would impose 100% tariff on China's imports starting as early as November 1st or sooner. Okay. And this is on top of the existing tariff. So if you have 100% tariff, you're basically saying you're out. That's exactly what this means. 2, China's export control on rare earth. So China recently, the reason this is happening is because China recently broadened export restriction on rare earth and critical mineral inputs that are essential for technology, defense, and electronics. They said to their own people, before you export anything to anywhere, I want to know about it. So these controls reduce supply and raise concerns about bottlenecks to official supply chains. You need to understand that for a U.S. company, a defense company that's trying to make fighter jet, they cannot make the fighter jet without it. At least not today. So the U.S. response is viewed as a retaliation, obviously, to China's export controls. What are you doing? Also, the U.S. signaled cancellation or postponement of a planned meeting between Trump and Xi, the premier in China, reducing diplomatic pathways for de-escalation. You got to realize something here. The idea is this. The U.S. has been very forthright in terms of its control and the trade deficit, not just with China, with India and Switzerland and a bunch of other countries. And frankly, with Europe and Mexico, and all of these countries have folded one by one, including Canada, meaning they've agreed to negotiate and they agreed to the 15%, 10%, or whatever they took in. So they agreed to it. The trick is this. Some countries have not. And coincidentally, the three countries that are saying, no, that's not going to work. The first one, obviously, is Russia, although the U.S. is not doing any kind of business with Russia anymore, or nothing significant. As you probably noticed that Putin has not been particularly receptive to the advances from Trump in terms of stopping the war in Ukraine. So that's not really working. 2, India. 50% tariff on India. $100,000 H-1B visa, restriction of the labor workforce coming to the U.S. unless you're willing to spend $100,000 for each person that you bring in that you're willing to sponsor. That's also not working, right? Because essentially what had happened at the beginning of the year, U.S. was trying to negotiate with India in a way that India would lower its barriers. Now, keep in mind that India has significant barriers of entry in terms of its agricultural products, almost 39 to 40% for you to be able to import to India. So basically, India is saying, we don't want any competition to our farmers in India. And now, why? Well, you need to understand that on average, a farm in India has 4 or 5 cows, and it's 40% of the population. And it's a huge amount of votes for Modi, the Prime Minister of India. So if you have them compete with a farmer in South Dakota or in the plains of Missouri, so that's not going to work. They're not going to make it. So basically, what India has done is they say, 39% tariffs. The U.S. is say, why? Well, you know what? Then 50% tariffs for you. And they've been negotiating back and forth quite a long since the beginning of the year, even though Modi was the friends of Trump, as you probably recall. That's not really been working quite that well at the end of the day. But they've been talking, but nothing has been agreed. And on top of that, India, because of the 50%, actually started negotiating and went to a visit to China with Russia. Now, you need to understand that from the Indian point of view, it is very difficult to say yes. They're trying to have their cake and eat it, right? They say, well, we could do some effort in terms of some other tariffs that we could reduce, but we can't take the agriculture. I'm the only democracy basically between Russia and China, right? and technically I should be able to get along with you. But you've got to give me all these things. You got to allow me to, maintain the 30%, 39% tariffs. Also, allow me to buy oil from Russia, because technically at the end of the day, it's cheaper, right? You should allow me to do all these things, and they got away for a while, but now with Trump and the U.S. administration, that is not working, because you need to understand that the administration is also trying to build what we call the Quad, meaning Quad: U.S., India, Japan, and Australia, to circumvent BRICS, which has to do with Russia and Asia, and I'm sure you've heard about these entities. So that's what they're trying to do right now, and this is not really working that well, because India said, you know what? Nope, no, that's not 50%. So that didn't work for India as well. And why it's not working? Because they've got it good for a while, and they thought it was going to go on, and the U.S. administration is not having it. Right, for right reason or the wrong reason, they're not having it. And if you've seen a lot of things that's happening right now in the U.S. administration, they've been quite forthright, and we'll do a video on that and a live on that. But, for example, they just announced they're going to fire a bunch of government employees because of the slowdown, of the shutdown, right? So they're not joking around. They're serious. And, of course, they have a tremendous amount of support right now from Congress and the Senate. Anyway, so that's the reason why it's not working. And China, basically, as a discussion, they said, no, I'm not going to take that. I'm not going to take it. So China recently broadened export restriction on rare earth mineral and critical mineral input. So that has escalated. Why is the market dropped? Well, the market has dropped for several reasons. First of all, many U.S. companies rely on Chinese manufacturing components or supply chains. Higher tariff raises input costs or reduced margins. Remember, who pays for the tariffs? It's not the country. It's a company that's importing the goods. Supply chain disruption, export controls, and trade barriers on critical inputs disrupt production of high-tech defense and industrial sector. That what has happened, and that is a problem, right? When tension escalates, investors often sell equity and rotate towards safe assets. And the U.S.-China relationship is central to global trade. These people have got to get along. When it deteriorates, markets worldwide feel the pain via export channel, currency, and investor sentiment. So there's something going on here that you need to worry about, because these two giants are not able to get along. In fact, the market reaction was very severe. The S&P dropped 2.7%, which is a lot, right? What else happened? The market, the stock market went down. The Nasdaq fell 3.6%, right? With tech stocks along the hardest hits. That was tough, right? That was a bit of a situation, because in addition, the Dow Jones declines 1.9%. So in short, the renewed tariff threats, 100% rate, China's export restriction, and the heightened risk of a full-blown trade war worries everyone. Why can't we all get along? But why did China do this? What sparked this situation? What caused them to say that? And that's the question. Well, China announced a new tightened export control on rare earth elements and related technologies in magnets. Under the new rules, foreign companies must obtain Chinese government approval to export products that use Chinese rare earth materials or technology, even in trace amounts. Total control over the export. Total control. Because China dominates global processing, manufacturing, they control, they have 90%. 90% of these things. And I will explain to you what they're used for, and you're going to see that it's this a little bit worrisome. It's worrisome because they're needed for many items. For example, So what has the U.S. done? They publicly denounced China's move as shocking, although the U.S. did the same thing on other things, by the way, and warned it might reignite a trade war. It announced plans to impose 100% tariffs. And so it is not as though this was out of nowhere. Well, this escalation is the latest chapter in a broader ongoing U.S.-China trade conflict. It's been going on and on and on. There is a conflict. The U.S. wants to be independent, so does China, but they're not independent. China wants to control the environment, and in Asia, and the U.S. wants to do the same thing, and it's not working, and yet they need each other. Now, we have to be careful. I've also mentioned in the previous live, and not that I'm saying this is what's going on right now, but in the previous live, I did mention that the U.S. is building up. It's building up its armies. It's building up its infrastructures. It's building up and training troops. They've been doing a few things in a few cities. Although they're not training, but you could use communications that way as well to see how you could communicate in a situation that has to do with what's going on. So there's a lot going on. Also, the U.S. government has asked its weapon manufacturers to double to triple production. And of course, they're saying, yeah, okay, you know what, but I need rare earth mineral to do that. And China knows that. So it's a bit of a conundrum that we're having here. And, China had already responded previously with export restriction on certain rare earth, but now it's a total control. The timing is strategic. China and U.S. export control come just weeks before a planned summit between Trump and Xi. Chinese, are not joking around here. They're increasing China's leverage in negotiation. They want certain things. So the China's sudden intensification of control on rare earth export was the primary trigger. Yeah, they started it. So the question next is this. Why is China doing this and what it hopes to achieve? Well, there are several key elements. The first one that China is doing this for is national security, right? The China frames rare earth and related technological equipment as dual use. It's used in both civilian and military context. It argues that unrestricted export enable foreign actors to use Chinese technology or materials in sensitive defense, aerospace, and surveillance application. Someone is going to have to ask the question, why is this happening now? Why? It's got to be because of the U.S. administration. No, don't fall for that. This has been going on for years, right? The Chinese has been building out very slowly their protection, and they've been building, and they've been years they've been at it. It's just, I think, with the U.S. administration coming in and being more forthright, they're pushing it to go further and to react accordingly. Rare earth are among China's most powerful leverage points because China dominates much of the global supply chain, especially in refining, processing, and magnet production. It would take 10 years, U.S. 10 years to get back to this level. By tightening restriction just ahead of the planned diplomatic or trade, meaning China strengthens its bargaining position. That's why they're doing it. The timing signals to the U.S. we have tools to inflict pain in key industries you depend on. What are you going to do about it? Right? Are you going to work with me? Because if you're not, I can inflict pain on you. China is trying to lock in its role, not just in raw extractor, but through downstream processing, refining, and magnet manufacturing. Right? Segments where barriers to entry are higher. It takes years. It's very dirty. By imposing export licensing requirements, China threatens to extend its influence beyond its borders. These controls aim to slow or complicate efforts by the U.S. It's also signaling tough resolve and deterrence. I'm serious. I want it. China may want to signal that it's willing to retaliate when pushed. It is a test of how far it can push export controls. By restricting exports, China can prioritize domestic allocation, possibly giving its internal high-tech and defense sector preferential access to key markets. It's very difficult to plan on these things because you don't know what these people are doing, but yet they're impacting your lives. So, and that's not going to go away. The risk, of course, China is not without limits. Some countervailing pressures, constraints how far it can go. For example, global backlash and supply chain reconfiguration. Countries will accelerate efforts to diversify away from dependence on China, investing in alternate supplies. Diplomatic and economic retaliation. The U.S. may respond with sweeping tariffs like they're doing. Enforcement challenges. Self-inflicted damage if China goes too far. Key sectors may suffer from resource bottlenecks or loss of foreign markets. Trade wars, nobody won in a trade war. That's unfortunately the case. Nobody won in a trade war. So to be clear, so we're on the same page, what are rare earth minerals and what are they used for? Basically, despite, like I said before, despite the fact that we're calling it rare earth mineral, these are not rare, but they are very hard to extract and purify economically. And it's a group basically of 17 metallic elements. That's what we're talking about. It's a group of 17 elements, and that's what they call rare earth. And they're used for catalyst and glass polishing and magnets and laser and radar and advancing. Imagine you can't build those things. That's going to be important. So why are they so important to the U.S.? Well, in defense, they're very important to the U.S. because they're used in guidance system, fighter jet. Each jet is like 900 pounds of this stuff. Each jet, believe it or not. A drone, precision missiles, or reduced readiness and weapon production delays if the U.S. cannot get that. Number 2, electronics, smartphones, computers, display. If you can't get them, higher cost, possible shortage and component. But you may not have it. Imagine. Electric vehicle, high-strength permanent magnets in motors. If you don't have them, slower EV production, higher prices. Energy and transition, wind turbines, solar panels, nuclear controls. It disrupts clean energy rollout and energy security goals. MRI scanners, fiber optic. So this is very sensitive geopolitically because China controls 60-70% of the production, and that's a problem. It's a powerful weapon because it can pressure U.S. industries. It can test the U.S. response capacity, and it could signal to allies that China can turn off the tap if tension rise. So in summary, you need it. You need the rare earth. Because if you don't have it, that's going to be a problem. Now, talk about the stock market now. Right? So which are these stocks that, we know, how are the stocks done, frankly? Right? How the rare earth stocks, which one are we talking about? Well, we're talking about stocks such as MP Materials, one of the most prominent U.S.-listed rare earth producers. It operates Mountain Pass Mine in California. U.S. Rare Earth focus on building domestic rare earth magnets. You have Energy Fuels, Critical Metals, American Rare Earth. All of these companies, quite frankly, do quite well. The stocks of these companies have done quite well. Let me show you, for example, these stocks up almost 100% in some instances. And why are they doing well? Well, they're doing well because the market has realized that there's going to be a huge amount of focus on those. And that's what you need to do. You need to take advantage of the market. How do you take advantage of the market? Well, you buy before everybody else is buying. Right? And that's very important. Here's some more rare earth stock, critical stocks. I had recommended IDR to my subscribers, and they've done quite well. Yes, it's up almost 100%, 150%, I think. So what you want to do is, now that I'm telling you, you need to take a look at rare earth mineral stocks. Look at them. Understand them. Now, of course, not all of them are pure play. Like IDR is not a pure play. They do gold, and they also happen to have a mine. But I mean, I don't think the U.S. is going to stay there and beg and cry in front of China with a rare earth mineral forever. At some point, they are going to say enough is enough. I want my own stuff. So therefore, for you, there's opportunity. Don't worry about the market right now because the market is going to turn around. Eventually, the rates are going to lower anyway. The economy is doing great. A little bit of a problem as far as inflation and employment, but nothing to worry about too much right now. The moment you need to worry about the stock market is when first of all, when the market doesn't go down, that's a problem. And number two, when no one is talking about a potential bubble. The more people talk about bubbles, the more they are worried, and therefore you have a counterbalance. When we don't talk about it anymore, that's when you need to worry about it. There's lots of things to worry about in the stock market, obviously, where you need to worry about the fact that inflation is not going down. And I'll do a live on the fact that there's lots of inflation situation going on. It's moving up, not a lot, but it's moving up. It's starting to permeate. All these actions are finally starting to permeate through the system. So that's what you need to worry about. The second thing is, frankly, where are the jobs? We're not seeing lots of jobs being created, and that's a problem. So that's the other thing that you need to look at, and that's the other thing you need to worry about, because you cannot have inflation because we're going to be having low rates. Right? So, of course, do we need to worry about the current situation with the shutdown? And I'll do an update live on that. Yeah, you need to worry about it because it's going to start hurting after 3 weeks. And the problem that we're seeing is obviously one, unfortunately, the administration is not going to fold because they've got, especially with this Israel deal, peace deal. I mean, they're all powerful right now, so they're not going to budge. And unfortunately, the Democrats, I believe, put themselves in the corner. They're completely in the corner by saying healthcare. Look at me. Pay attention to me. And that's what's happening. Really, that's the only reason they did it. And it might not work. And the only way it's going to work is going to have to hold on until the last minute. If they drop now, then they lost any type of backbone that they're looking to show that they have. So, but the problem is that we're all going to suffer for it. So, we shall see what happens. We shall see what happens next, and I will see you. And hopefully, this was important for you to understand.